We are covering these 5 top actively traded stocks that are bullish today. While watching intraday price actions, let us inform you our review on NVDA. NVIDIA Corporation is a full-stack computing infrastructure company specializing in accelerated computing solutions to address complex computational challenges. The company operates through 2 primary segments: compute and networking and graphics. The compute and networking segment includes AI-driven data center platforms, networking solutions, autonomous vehicle technologies, robotics applications, and cloud computing services. Meanwhile, the graphics segment covers GeForce GPUs for gaming and PCs, enterprise workstation graphics, virtual GPU software for cloud-based computing, and Omniverse Enterprise for 3D Internet applications. NVIDIA remains a dominant force in AI, gaming, and high-performance computing, leveraging its innovations to drive growth and expand its market influence. Recent business developments have had a notable impact on NVIDIA's stock performance. TSMC has reportedly pitched a joint venture to NVIDIA, AMD, and Broadcom to operate Intel's Foundry division. Under this proposal, TSMC would take a stake of no more than 50%, managing Intel's chip manufacturing operations while ensuring that the U.S. chip-making giant remains domestically controlled. The discussions, still in their early stages, highlight the ongoing strategic shifts in the semiconductor industry as companies navigate supply chain dependencies and manufacturing capabilities. NVIDIA's potential involvement could offer opportunities for enhanced production capacity, but challenges remain in integrating Intel's manufacturing processes with TSMC's operations. Beyond manufacturing partnerships, NVIDIA's upcoming GTC conference is drawing investor attention, with analysts expecting it to be a pivotal moment for the company and the broader technology sector. The event is likely to showcase advancements in AI, high-performance computing, and enterprise solutions, reinforcing NVIDIA's leadership in these fields. Analysts at Wells Fargo have reiterated their overweight rating on NVIDIA stock, maintaining a $185 price target despite recent market fluctuations. They see the current environment as a potential buying opportunity, emphasizing long-term demand for AI-powered technologies. While NVIDIA's growth outlook remains strong, potential risks include regulatory scrutiny, geopolitical tensions in the semiconductor supply chain, and competition from other industry players. Investors will be closely monitoring upcoming developments, including the outcome of TSMC's proposed foundry collaboration and any major announcements from GTC that could further shape the company's trajectory. As NVIDIA continues to expand its AI and computing ecosystem, its ability to execute strategic partnerships and technological advancements will be critical to sustaining investor confidence and long-term growth. Our review on TSLA. Tesla Incorporated manufactures and sells electric vehicles and energy storage solutions through its automotive and energy segments. Tesla stock has experienced heightened volatility amid political controversy, weakening demand, and concerns about brand deterioration. A growing boycott, spearheaded by activist group Tesla Takedown, has gained traction as consumers protest CEO Elon Musk's close ties to President Trump and his influence on federal policy. The backlash has led some Tesla owners to sell their vehicles and discourage new buyers, eroding the brand's appeal among environmentally conscious consumers and progressives who were once its core supporters. In international markets, Tesla is facing significant headwinds. German vehicle registrations dropped 76% year-over-year in February 2025, reflecting waning demand in Europe. In response, multiple Wall Street analysts have revised their outlooks, cutting Tesla's stock price targets and delivery expectations. Evercore ISI reduced its target to $235 and lowered its 2025 delivery forecast to 1.75 million units, falling below 2024 levels. JP Morgan slashed its target to $120, citing unprecedented brand erosion, while Guggenheim warned that Tesla could soon experience negative free cash flow if sales do not stabilize. Meanwhile, Musk's controversial government advisory role has fueled public distrust, with Tesla's so-called Department of Government Efficiency, DOGE, facing mounting criticism over its opaque decision-making and perceived overreach. Political tensions have further complicated Tesla's position in the market, as Musk's alignment with Trump continues to polarize potential customers. Despite these challenges, Tesla shares rebounded following Trump's public endorsement of the company. Standing outside the White House alongside Musk, Trump condemned the boycott as illegal, vowed to classify violence against Tesla showrooms as domestic terrorism, and personally committed to purchasing a Model S. While this public show of support could drive purchases among Trump's base, analysts caution that Tesla's core demographic, tech-savvy, environmentally conscious consumers may continue shifting toward competitors such as Rivian, Lucid, and traditional automakers expanding their EV lineups. Adding to investor uncertainty, Tesla's long-term growth plans remain in question. Analysts have voiced concerns over the slow development of new vehicle models, with little clarity on the timeline for Tesla's next-generation affordable EV. Meanwhile, Tesla's self-driving ambitions face skepticism, as third-party data suggests its full self-driving FSD software has shown limited improvements. Looking ahead, Tesla must navigate a complex landscape of political controversy, shifting consumer sentiment, and intensifying competition. Investors will be closely watching the company's upcoming delivery reports and earnings releases to assess whether Tesla can stabilize demand and restore confidence in its long-term growth trajectory. Our review on INTC. Intel Corporation is a global designer and manufacturer of semiconductor products, operating through Intel Products, Intel Foundry, and all other segments. The Intel Products segment includes Client Computing Group, CCG, Data Center and AI, DCAI, and Network and Edge NEX, while Intel Foundry focuses on technology development and manufacturing services. Intel stock surged over 10% in after-hours trading following the appointment of Lip-Bu Tan as CEO, effective March 18th. A seasoned semiconductor executive and former Intel board member, Tan replaces interim COSOS David Zinsner and Michelle MJ Johnston Holthouse. Zinsner will remain as CFO, and Johnston Holthouse will continue leading Intel Products. Tan's leadership signals a potential strategic shift, with investors watching whether he will maintain Intel's current structure or split design and manufacturing. As former CEO of Cadence Design Systems, he drove innovation and shareholder value, with Cadence's stock surging under his tenure. His expertise in the semiconductor ecosystem could revitalize Intel's product and foundry ambitions. A major challenge for Tan is Intel's struggling manufacturing division. The company has explored potential partnerships, including Taiwan's semiconductor manufacturing company, TSMC, but analysts remain skeptical about compatibility. Some believe Tan, previously rumored to support splitting Intel, may revisit the strategy to improve efficiency and compete with rivals like NVIDIA and AMD. Others, however, see potential benefits in keeping Intel intact while creating a stronger separation between its design and foundry businesses to reassure external customers. Intel also faces challenges in AI chip development and declining market share. While still dominant in traditional computing, its slow progress in AI-driven semiconductors raises concerns. The company has made efforts to catch up, but competition from NVIDIA and AMD remains fierce. Analysts predict TAN may implement aggressive cost-cutting, possibly including workforce reductions, to streamline operations and enhance profitability, following a model similar to Broadcom's CEO Hock Tan. Beyond cost control, Intel must also focus on execution. Delays in chip production and foundry expansion have frustrated investors, making clear and timely delivery of next-generation process nodes critical. TAN's ability to rally Intel's engineering teams and restore confidence among customers will be crucial. Investors' initial response suggests optimism, but TAN's long-term success depends on executing strategic initiatives. Whether he keeps Intel unified or moves toward a split, he must navigate financial and operational complexities. As he assumes leadership, stakeholders will closely monitor his approach to AI, manufacturing, and cost management, with further updates expected in the coming months. Our review on LCID. Lucid Group Incorporated is a technology company focused on designing, developing, and manufacturing electric vehicles, EVs, powertrains, and battery systems in-house. The company sells directly to consumers through online and retail locations and operates its own service network. Its flagship model, the Lucid Air, is a luxury EV sedan produced at its Arizona manufacturing plant, with a roadmap of future vehicle programs and innovations. Lucid stock surged following the announcement of a new capital infusion from its largest investor, the Public Investment Fund, PIF, of Saudi Arabia, reinforcing confidence in the company's long-term vision. The additional funding is expected to provide Lucid with the liquidity needed to scale production and expand its product lineup, including the upcoming Gravity SUV. This investment comes at a crucial time as the company works to address production bottlenecks and demand fluctuations that have impacted deliveries. Despite the positive market reaction, challenges remain. Lucid has faced headwinds from supply chain disruptions, pricing pressures in the EV market, and increasing competition from established automakers and emerging startups. The company has taken measures to improve operational efficiency, including cost-cutting initiatives and strategic workforce reductions. Analysts will be watching closely to see how Lucid balances growth with financial discipline as it aims to increase production while managing expenses. The expansion into international markets, particularly in the Middle East, represents a potential growth avenue. Saudi Arabia's commitment to sustainable transportation aligns with Lucid's ambitions, with plans to establish a manufacturing presence in the region. If executed successfully, this could provide a competitive edge and boost revenue streams outside North America. Investors remain cautiously optimistic about Lucid's future. While the recent funding strengthens its financial position, execution remains key. Delivering on production targets, expanding the vehicle lineup, and improving profitability will be critical in determining the stock's long-term trajectory. Our review on PLTR. Palantir Technologies Inc. is a software company specializing in advanced data analytics and artificial intelligence platforms designed for enterprise and government applications. Its key offerings, Palantir Gotham, Foundry Apollo, and AIP, help organizations process vast datasets, optimize decision-making, and integrate AI capabilities while maintaining security and regulatory compliance. Palantir has positioned itself as a critical technology provider across sectors, including defense, finance, healthcare, and supply chain management, by enabling users to extract insights from complex data environments. Shares of Palantir Technologies moved higher on Wednesday as the broader software sector rebounded from earlier losses. The sector had been pressured by investor concerns over recession risks and trade policy uncertainty following newly implemented U.S. tariffs. The market sell-off earlier in the week stemmed from concerns about economic instability after the Trump administration imposed a 25% tariff on imports from Canada and Mexico and increased tariffs on Chinese goods from 10% to 20%. Although the administration later introduced an exception for USMCA-compliant goods, the shifting trade policy fueled uncertainty around supply chains and pricing, weighing on software stocks. The rebound in technology stocks on Wednesday was partly attributed to reports that Taiwan's semiconductor manufacturing company, TSMC, had proposed a joint venture with major chipmakers such as NVIDIA, AMD, Qualcomm, and Broadcom to manage Intel's foundry division. Under the proposed structure, TSMC would oversee Intel's foundry operations, which customized chips for clients, but it would not hold a majority stake in the venture. Reports suggest that the Trump administration played a role in encouraging TSMC's involvement as part of broader efforts to strengthen domestic semiconductor production. For Palantir, these developments are significant as the company's software platforms depend on high-performance computing and efficient access to advanced semiconductors. A more stable and efficient supply chain could benefit Palantir's customers, which include government agencies and enterprises leveraging AI and data analytics for critical operations. Improved chip manufacturing capabilities would likely enhance the performance and availability of the computing infrastructure that powers Palantir's AI-driven platforms, ensuring continued reliability for its clients. Beyond immediate market fluctuations, Palantir's long-term outlook remains promising as demand for AI solutions accelerates across industries. The company has continued expanding its presence in defense, commercial, and industrial sectors, capitalizing on the growing need for AI-driven decision-making. As organizations seek more robust data solutions, Palantir's ability to integrate AI models into operational workflows provides a competitive advantage. While macroeconomic uncertainties persist, investors appear optimistic that improvements in semiconductor supply chains, coupled with Palantir's expanding AI initiatives, could drive future growth. With increasing government contracts, corporate partnerships, and AI deployments, Palantir remains well-positioned in a rapidly evolving technology landscape, making it a stock to watch as AI adoption continues to reshape industries. Please subscribe and give the video a like and check out more from our playlist. Thanks!